Fed just did an emergency 50 basis point cut 2 weeks ahead of a meeting.
Yeah, this is much like in January of 2008 when I was there the last time they did the intermeeting cut, and clearly they were concerned about the way the markets were moving and the way financial conditions were moving. I think you guys were getting exactly the right issues of, I think they wanted to try to get out ahead of things rather than wait for the situation to become problematic, try to be proactive, try to get out there early. But the question is, does that instill confidence that, yes, they're taking the reins, or does it make people say, gosh, things must be a little bit worse than I expected? So I think the press conference is going to be super important to see how Jay Powell characterizes this.
But, I can remember, Randy, the responses of this type, a 50 basis point cut to obviously in the midst of the financial crisis, but even after long-term capital, remember that one? I think it was 50 also, in the fall of 98, if I remember it. That helped a lot. But that was a potential liquidity crisis. This is not that.
Exactly. This is a very different kind of thing. The Fed can't cure the virus. So if you have a breakdown of the global supply chains, that's a supply issue that the Fed can't directly address. During the financial crisis in 2008, 2009, there was a dollar liquidity shortage. Everyone wanted dollar liquidity. The Fed could do something directly about that and try to spread that around the world. This can try to help offset some of the tightening of conditions, some of the demand reduction, but it can't get at the fundamental of the problems of the virus.
And I think that Jay Powell would say as much in his news conference, but just that, what they are anticipating or what some folks are forecasting is that this will weaken the economy, both in the U.S. and in the globe, Randy, which I think is an important point. The Fed is the world's central banker, and the Fed has bullets still to fight this, where the ECB and the BOJ does not. I wonder how much of it has to do with the fact that the Fed can move and ease conditions, and that could help economies like Europe and Japan, which could get hit a lot harder than we will.
I think that's exactly right, because the Fed has more room because the Fed raised rates and, brought rates down and now brought rates down further. But we're not in negative territory like much of the rest of the developed world. The balance sheet as a percentage of GDP is much smaller than in Japan, where it's more than 100%. So there's more cushion that's there. People run to the dollar when there are uncertainties, and so the dollar is the world's reserve currency. So it's important that the Fed show that it is aware of the challenges, it is willing to do something about them. The challenge is, that the Fed can't act alone, and so it's going to have to be not only the central bankers, but the finance ministers, thinking about tax policy, thinking about some countries are proposing suspending payroll taxes temporarily. Providing other tax incentives for more investment to do some sort of offsets. None of these directly can address the virus issues, but they can all try to soften the blow.
As you're saying that, Randy, Mnuchin still in front of House Ways and Means saying not considering a China tariff rollback at this time. But it does sort of highlight what we will probably hear Powell talk about, right? That is to say, look, we've done what we can. Now it's everybody else's turn, right?
Yeah, but he has to be a little bit careful about that, because he says if it's sort of one and done, I don't think the market's going to like that. He has to be sympathetic to the challenges that are there and to the things that the Fed do. But exactly as you said, he has to be very clear the Fed cannot deal with the supply chain issues. There's nothing that a central bank can do about that. During the financial crisis, the Fed could provide a lot of liquidity when everybody wanted dollar liquidity. So it was a direct thing that they could do to try to address the global problems. This is much more indirect.
Hey, Randy, Steve Leisman here, bringing back not so fond memories of talking to you during the last crisis. Just real quickly, what do you expect to happen at the next meeting? And I'm doing that staring at the probability charts. And I have to say, I don't really believe them, but it looks to me like they're pricing in a 41 or 42% chance of another 50 basis point rate cut, and a 58% chance of another 75. It may be that these algorithms haven't had a chance to adjust, but the market seems to still, at this point, be banking on additional rate cuts at the March meeting just a couple weeks from now.
Well, when we did the cut in January of 2008, just a week before, I think it was just about a week before our meeting, we did do another cut at the meeting, but a smaller cut.
Right.
So it is certainly possible that that would happen, and I think it's not unreasonable that the markets will will price part of that in, because I think precisely because they're not seeing this sustained boost in the market. You know, if the stock market went up 2% and stayed up 2%, then it's less likely that the Fed would cut, not because the Fed's targeting the stock market, but because they're taking the signal for financial conditions from that.
Randy,
if the markets continue to fall, the Fed's going to react.
At the press conference coming up at 11 o'clock, I am sure some reporters are going to raise their hand, and they're going to say, Mr. Chairman, are these temporary? Do you intend to take them back once the virus clears? How would you answer that question if you were the Fed chairman in that case?
So what he'll do is he'll pivot and say, what I do is look at overall economic activity. This is not just about the virus. This is about overall economic activity. And then he'll go back to trying to sustain economic recovery, and we will do whatever it takes to try to sustain the economic recovery. I assume that's how he'll respond, and I think that would be the sensible response, because it's not simply about the virus. It's also about a lot of the consequences of whether it's travel ban policies, confidence, a whole variety of things that are not just narrowly related to the virus.